These are probably the top three chicken places, fast food places I'd like to go. Got good old McDonald's with the McChicken. um, Very good. The Big Crunch from KFC. And they didn't have chicken sandwiches, but Jollibee. Love Jollibees. Growing like crazy here in Canada. So there's a chicken war happening with the fast food restaurants. And rather than bet on which one's going to win at the end of the day, maybe there's a way that you can profit from this chicken war and still make it out on top for your investment portfolio. Hey, you wonderful people out there, Chris here from the Business Report Show. Before I begin, as a disclaimer, I'm not a financial planner or advisor, and everything I say in this video is just my opinion and for education purposes only. Make sure to seek a professional before investing. Back on February 24th, 2021, McDonald's Corporation in the United States announced that they were increasing their chicken sandwich options on their menus. Now, instead of trying to pick which brand is going to win this chicken sandwich war for your stock portfolio, I'm going to discuss one industry you should focus on instead to make money no matter which brand wins and which one comes out on top. Fun fact. The technical term for the chicken industry is the broiler industry, named after the way in which chickens are reared and prepared for the meat industry. That is, broiler indicates that chickens are born, bred, and processed specifically for human meat consumption. If you go back to the 19th century, prior to the broiler industry, many households had their own flocks in the backyard that provided both eggs and the occasional chicken for holiday dinners. With the onset of the grocery store chains and development of mass food production in the early 1900s, chicken supply went from cottage industry to broiler production. The first broiler house in the United States was started by Celia Steele of Ocean View, Delaware. She raised her first flock of 500 in 1923, selling 387 2-pound chickens for 67 cents per pound. Her business model was profitable and would set the standard for broiler houses in the time period. In 1924, she doubled to 1,000 chickens, and in 1925 leaped to 10,000. By 1952, the broiler industry would surpass farm chickens as the main source of chicken meat, and by 1973, the industry processed 3 billion chickens per year, quite the jump from 10,000 during Miss Celia Steele's era. Over the last 50 years, the broiler industry has evolved from fragmented, locally oriented businesses into a highly efficient, vertically integrated, progressive, successful story. Today, the United States has the largest broiler chicken industry in the world, with over 16% of production exported to other countries. In Canada, the poultry industry is a major contributor to the Canadian economy, comprising over $6.5 billion to Canada's GDP. For both countries, the industry continues to grow, and North Americans consume more chicken than anyone else in the world. More than 98 pounds per capita in 2020 alone, the number one protein consumed in the United States. So check out this stat. During this year's Super Bowl alone, Americans ate 1.42 billion chicken wings. Assuming one person could eat 3 wings per minute, that would take that one person more than 900 years to eat that 1.42 billion number of wings. That's a lot of wings! So this leads us to the headline that started this video, the chicken sandwich wars. And as you can see, as I said at the beginning of the video, I have the McDonald's, KFC, and the Jollibee one right in front of me. And I'm gonna take a couple more bites out of this to give you that taste test. But if you're enjoying this video, make sure to hit that subscribe button and like button, as every little bit helps. You know, to be honest, all of these chicken selections taste delicious, especially if you're craving fast food and, you know, looking for a chicken option. Now, McDonald's, they do have a healthier grilled chicken option, but the crunchiness of the KFC and the Jollibee burger is just amazing. At the end of the day, I'll have to give Jollibees the leg up on the chicken war, but from a sandwich standpoint, it's a bit of a tie between McDonald's and KFC. Anyways, so as of February 24th in the US, McDonald's launched a trio of new chicken sandwiches. All three options feature a new crispy all-white meat chicken Fil A and are served on a new toasted buttered potato roll. Interestingly enough, in Canada, over the last few years, we've enjoyed a nice assortment of chicken sandwiches at McDonald's, including options such as the BLT with grilled chicken and Szechuan spicy McChicken. So why is McDonald's upping their chicken menu in the US? Well, Linda Van Gosen, the Vice President of Menu Innovation at McDonald's, was recently quoted as saying that, "We've heard our customers loud and clear, and we know they're craving more chicken options. We are confident all chicken fans, from traditionalists to spice enthusiasts, will enjoy and discover a new menu favorite they'll come back for time and time again." In reality, McDonald's makes decisions based on economics, revenue growth, and protecting market share. While the 2019 QSR report shows that McDonald's is holding their #1 position in the fast food industry, competition is heating up from restaurants such as Popeyes and Chick-fil-A. In terms of burgers, Chick-fil-A is McDonald's largest competitor, and in 2020, Kalinowski Equity Research polled McDonald's franchisees for a two-part report, with the second section focused on the question of which competitor McDonald's is losing market share to. Nearly 9 in 10 said Chick-fil-A. McDonald's is clearly heeding this warning in its move to add more chicken to their menu. Now, obviously, this is a huge win for suppliers, as McDonald's will need to ramp up its orders of chickens to ensure they meet the new demand from customers. According to the NPD Group, for the year through July, 2.3 billion breaded chicken sandwiches were ordered in fast food restaurants, a 3.3% jump from the prior year period. Hamburger servings, meanwhile, slipped a bit to 6.4 billion. This shift is expected to continue as customers' tastes continue to move towards more chicken. Clearly, there's a case then to invest in chicken suppliers, and the good news for us investors is that most of the large broilers are publicly traded. I was hoping to find some options for smaller farms and suppliers, but most that I found are privately held, which is understandable considering many of these owned by generations of families that prefer not to have outsiders meddle in their business. So who is the big winner for this new McDonald's chicken strategy? Tyson Foods, ticker symbol TSN, is the main supplier for both McDonald's and Chick-fil-A. Although both restaurants do purchase across different suppliers at any one time, most of them are heavy on buying from Tyson. So what do I like about Tyson? While this video is about chicken, Tyson is one of the major producers and sellers of beef and pork as well, giving it a diverse product revenue stream. Its distribution is also diversified, as nearly half of the revenues come from the domestic retail channel like groceries, supermarkets, and internet-based retailers. So even under a global pandemic, they still saw an increase in demand as people ate out less. Tyson also pays a dividend with the current approximate yield of 2.5%. More impressively, their dividend payout is only 22% of free cash flow, which is a great indicator of sustainability of their business model. Tyson was trading close to a 52-week high a few weeks ago. It's still under its high of $91 closing price from 3 years ago. Taking a look at the absolute PE valuation model based on the current PE of 12, there's some intrinsic value with a price target of $86. So what are some of the negatives about Tyson? Well, late last year, Chick-fil-A and major grocery chains launched a lawsuit against Tyson and other major chicken suppliers alleging price collusion. Any judgment against Tyson and industry peers can mean hundreds and millions of dollars in fines and legal fees. While this isn't the first time the poultry industry has been accused of and found guilty of collusion, it does put a negative mark on the company. The other item to be careful of is, although chicken demand is rising, their larger segments like beef are slowing in demand and may hurt overall sales. Facility safety to guard against COVID-19 has also added significant costs to their bottom line, but of course this is for the betterment of the workers, so I wouldn't expect them to make any cuts there in the future. I'm overall bullish on the stock and may look to add Tyson to my portfolio on the next dip. Now, when looking at investing in different industry sectors, investors should also look at competitors and other companies that operate in this industry. From a competitor standpoint, definitely check out Pilgrim's Pride Corp, ticker symbol PPC, Sanders Farm, ticker symbol SAFM, and for investors in Canada, you can look to Maple Leaf Foods, ticker symbol MFI. I actually don't mind Maple Leaf Foods here in Canada. It was trading a few dollars below its 52-week high a few weeks ago. Their most recent earnings announcement in February showed 11.1% year-over-year growth and a 45% increase in net earnings, despite the challenges brought on by the pandemic. Let's not forget other businesses that service the poultry industry, as they will also benefit from this growing demand for chicken. You can look to companies like Nutrien, the largest agribusiness in Canada, that has one segment that supplies equipment and actual feed for suppliers. MetLife provides financing and insurance for farms and agricultural suppliers. Gladstone Land Corporation and Farmland Partners Inc., as an example, are both owners and acquirers of physical farmland. I can probably make videos for each one of these companies, but for the purposes of this video, hopefully you can see how an investment thesis can expand to cover other companies tied to these main companies that we cover. Well, that's it. I'm gonna get back to eating my chicken here. I hope you enjoyed the video, and hopefully you will look into chicken investments as well for your next stock purchases. Make sure to leave your comments below about the poultry industry and let me know if there are any other industries you'd like me to cover in my next few videos. Don't forget to hit that subscribe button and that like button. Every little bit helps. Thank you for watching the Business Report Show. Remember to always be learning, always be investing. I'll catch you in the next video.